Hello, good evening, and welcome to Unacademy IAS, a one stop destination for all the English medium civil services aspirants. This is Shyam Kaggod here, taking up the second session of Indian economy in the initiative of Conquer Prelims. And today we are going to cover the current affairs from this particular subject of Indian economy, which have appeared from July 2025 to December 2025. Now, before I start the session, please do let me know that I'm audible and visible for all of you. Those present, please confirm. Am I audible and visible? Thanks a lot. Let's start. So before I start, here are certain very important announcements. The first one, Unacademy has introduced the Unacademy Revision Test Series, URTS. In this particular test series, which is required for all the civil services aspirants, because to understand the level of your preparation, in order to ensure that you're going to ace the examination, you need to attend as many test series as much as possible. So in this test series, we'll be providing you 2500 high quality questions which are based on the latest UPSC pattern. The subjects, all the subjects, 8 subjects which are relevant for the civil services prelims examination will be covered. 22 full length test with OMR sheet will be provided to you. Right now we are providing this as a discounted price of 1999. Check out the details by clicking on the link provided in the description. Whatever is the price mentioned there, use the code IS English and you shall receive the discount. Do not miss out. Attempt the test series. Second one, after the session is over, the PPT in the form of PDF will be uploaded in a centralized database in our website. All you need to do is, there's a QR code visible on the screen right now. Scan this and wait for some time. After the session, the PDF will be uploaded. And the third very important point I just want to mention, in this particular session where I'm going to cover a lot of concepts from different areas of Indian economy, I want you to simply sit and listen to the lecture. Sit and listen. No need to write down, because I'll be providing you the notes of this particular session. Download it after the session is over. And related to these particular topics, I'm going to cover on 20th January. 20th January at 11 a.m. I'll be conducting a test, MCQ based test. Download the PDF, download the notes, use it for revision. 20th, attend the test. And then you shall understand whether you have revised correctly or not. Where is, right, let's say you are lacunae in terms of preparation, which area you are lagging behind, are you making silly mistakes, etc. How do you join the test? Here is the QR code. Scan this, you'll be taken to a page. Click on the notify me button, and once the test will start, it is on the platform. Once the test will start, you'll be able to attempt the test. Let's start then. First topic, sulfur coated urea. Everybody is okay with the announcement? Everybody is okay so far? Let's start. First topic, sulfur coated urea. Yesterday this was one topic. I said it is there in the handout, but some of you basically said, sir, explain that as well. So sulfur coated urea. In the context of agriculture sector, there is a lot of times a discussion associated with urea. In the last couple of years, there is a discussion associated with nano urea. Nano urea, the world's first, has been developed by IFCO, a cooperative, farmer cooperative. Please remember, IFCO. It has even entered into agreements in USA to export the nano urea to USA. But in addition to that, there is also one more discussion, that is basically sulfur coated urea, or else also called as urea gold. Sulfur coated urea or the urea gold. What is essentially the idea here? I'm pretty sure all of you heard of neem coated urea. Please do let me know in the chat section. And again, I'm telling you, in my session, I want it to be interactive. I want it to be interactive. Keep on replying to me. Right, so all of you heard of neem coated urea? What is the basic idea? Neem coated urea essentially refers to the pellets, right? Basically the crystals which will have a neem coating. Now in the context of urea gold or sulfur gold, you will have a very light coating, very thin coating of sulfur. Very simple. Very thin coating of sulfur. And what is the use of this? In agriculture sector, you need lot of nutrients which are important for cultivation purposes. The plants require micronutrients as well as macronutrients. But in case of Indian soils, because of the cultivation process that we have been following, there is always a lower level of nutrient presence in the soil. And currently, the urea that we are simply supplying, the urea, the normal, traditional, the crystalline urea, there is also concern associated with that, as in the productivity is not greater because the absorption is not very high. You are applying a lot of urea, but because suddenly the leaching process will take place, the breakdown will happen very fast, the absorption doesn't happen a lot. That is going to have an impact on productivity. So the government has now announced a sulfur coated urea. With the sulfur coating on the urea, one, the absorption of sulfur in the soil will increase. Absorption, right, in the plants will also increase. This is one of the nutrients that is actually required for the growth of the plants, especially the pulses, especially the leguminous plants, especially, right, let's say various oil seeds, etc. They require sulfur. So you'll be supplying sulfur. In addition to that, with application of sulfur, the coating of the sulfur will ensure that the absorption will be much better when there is a coating of this particular sulfur on the urea crystals. With this, we are expecting the productivity in the land to also increase. So this is essentially the concept of urea gold. Enriches the soil with sulfur, more economical and efficient compared to neem coated urea, reduces the input cost for the farmers. What is the logic? The government simply says, because this is going to add to more productivity, absorption will be much higher, the farmer's consumption would be much larger. That is, if not used, if the traditional urea used, the consumption of urea could be much larger compared to this. Here, the consumption of urea would be much lower. So the input cost is also expected to go down. And right, in addition to this, urea subsidy has been extended by the government. Done. So these are certain important points in the context of sulfur coated urea. Can I move on to the next topic? Government adds 7 products from Bihar on the eNAM platform. Okay, Harsh Chandra is saying there is a lag in between. Is it the same for everybody else? Please do let me know. Is it the same for everybody else? That is, there is a lag or not? When you say yes, is it the answer for lag or not? I'd simply say lag is there. Yes, no. Yes, sir, it lags occasionally. No, sir, no lag. Most of you are saying lag is not there. Some of you are saying lag is there. Please hit the refresh button. Let me see, because from my side, everything is correct. Right, so please hit the refresh button. Let's start. Government adds 7 products from Bihar on eNAM platform. Right, what is this eNAM platform? eNAM platform, please understand, simply stands for Electronic National Agriculture Market. Electronic National Agriculture Market. Right, the Electronic National Agriculture Market essentially is a platform where the normal APMC, the traditional APMC mandis are connected. The traditional AP mandis are connected, meaning what? It is like essentially the Amazon app that you're using, the Flipkart app that you're using. Essentially, in the Flipkart or Amazon app, there are multiple sellers across India. Right? Basically, they will be present on the same platform. Apply the same logic to the idea for APMC mandis, Agriculture Produce Market Committee mandis, which have been set up across India. Now, right, what essentially happens? APMC mandis are connected using, right, let's say a system. This particular system, that is the eNAM, the platform has been developed and is being maintained by Small Farmers Agribusiness Consortium. Please remember, Small Farmers Agribusiness Consortium. Right? So this is the authority which is maintaining the eNAM platform. Now, under the eNAM platform, many agriculture commodities are listed. Now, last year there were Bihar elections. I'm pretty sure all of you have heard, have gone through or read something associated with the Bihar elections. So during the Bihar elections, this was one of the announcements that was done by the government. That is, there were 7 products from the state of Bihar which were cultivated in the state of Bihar. A lot of them had GI tag as well, geographical indication tag as well. These particular products have been listed. The notification associated with that has been issued by the Agriculture Ministry, that is the Union government, notifying that these particular products have been brought in the ENAM platform. And more than 200 commodities right now are listed under the ENAM. What is the use of ENAM? Somebody said, sir, Karnataka was the first state to have ENAM. My dear, yes, the model of ENAM was implemented in Karnataka, but the name of that is not ENAM, by the way. In Karnataka, that is called as Rashtriya E-Marketing Services, REMS. Rashtriya E-Marketing Services. Okay, in Karnataka, it is REMS. At the national level, it is E-National Agriculture Market. So far, so good. Right, so Government of India now has notified inclusion of 7 more commodities in the ENAM. The advantage of this is, listen to me carefully, ENAM is not a parallel marketing network. I'll repeat the statement. ENAM is not a parallel marketing network. That is, you already have APMC mandis. So, ENAM, is it a parallel marketing network? No. It is essentially a connection of the APMC mandis. The farmers, they are selling in the APMC mandi, same commodities are also listed in the ENAM. Rather than, right, you going individually to all these particular APMC mandis, you can essentially purchase, bid and purchase for these agriculture commodities through the ENAM model. Right, so it is going to basically promote interstate transactions, intra-state transactions. Right, everybody is able to understand interstate as well as intrastate transactions. So these are certain very important points associated with ENAM, the commodities listed on the ENAM as well as the APMC mandi. Okay, let's go forward. By the way, do let me know, can you think of any state which doesn't have APMC law? I'm asking you this question because you should know this. Agriculture marketing is a state subject. I'll repeat the statement. Agriculture marketing is a state subject. Can you think of any state which doesn't have APMCs? Bihar, Kerala. Yes. Right. Bihar earlier had APMC law. It has repealed it. Kerala doesn't have APMC. And the states, some of the states in the northeastern part of India do not have APMC. Right. So argument is this, right? These are the important points. Okay, let's go forward. Next article. Is everybody okay? Can I move on to the next one now? Okay, next one. Fugitive Economic Offenders Act. Fugitive Economic Offenders Act. What is this idea of a Fugitive Economic Offenders Act and why should you read this now? Last year, there was basically a lot of news associated with Mr. Vijay Mallya. Correct? All of you heard of Mr. Vijay Mallya ji? Last year, there was a lot of discussion. In addition to this, there was one more businessman who is present in UK. Not Mr. Vijay Mallya, by the way. There was one more businessman who is present in UK who was declared as economic offender by the Delhi court. Right, so that is the precise reason there is a discussion associated with the concept of Fugitive Economic Offenders Act. This particular act was passed in the, right, let's say Parliament in the year 2018. Right, and what are the important points associated with the Economic Offenders Act that you need to remember? Let's say there is a certain case which has been filed against a person. Right, there's a person XYZ. Right, there is a case which has been filed against this particular person. And what is the case all about? The case is about, let's say, counterfeiting government stamps or currency notes. It is associated with a check dishonor, right, when there are no funds in your bank account, money laundering activities, transaction conducted to defraud creditors, that is the lenders who have given loan to you. So you are involved, a person is involved in any one of these, allegation is there. An FIR has been filed and the value that is involved in this particular case is at least 100 crore rupees. Now there is, right, let's say a notice which has been issued to you, right, FIR has been filed, you have been asked to be present in the court, you have escaped from India, right? Essentially, you have escaped from India and you do not want to come back to India and face prosecution. In such cases, the courts have the right under Section 4, using this particular section where these particular offenses are quoted, the courts have the right to declare you as economic or fugitive economic offender. Is everybody able to understand this? Simple. A person has been alleged to be involved in certain activities. These are some of the examples which are listed there. And the amount which is involved in this particular case is at least 100 crore rupees. You have escaped from India. The court wants you to come back and face allegation. Proceedings will take place. But you are simply saying, no, I don't want to come back. In such cases, the courts will have the right to declare you as a fugitive economic offender. Please memorize these particular offenses. Memorize, can be asked in the preliminary examination. And in such cases, imagine you have certain assets in India. These particular assets can be confiscated. Let's say the assets will be taken away by the government, and you cannot file a civil case. You cannot file a case against the government for taking over your assets. Right? These kind of powers have been given under the concept of Fugitive Economic Offenders Act. Everybody is okay with this idea? Everybody is okay with this argument? In many cases, for example, Mr. Vijay Mallya, this particular act has been invoked. Right? The provisions have been invoked. In the context of Mr. Nirav Modi, these provisions have been invoked. Right? Many people, they have been labeled as fugitive economic offenders, and a lot of them, Mr. Choksi, by the way, a lot of them were there in the newspaper in the last 1 year. Right? So please be aware of the section, the act, and the provision. Okay, let's go forward. Next, HDFC to issue bonus shares. HDFC Bank to issue bonus shares. In fact, it has already issued because this is from last year. What is basically the concept of bonus shares here? Right? Listen to me carefully now. Let's assume there is a company ABC. Right? There's a company ABC. The company is a listed company. Listed means what? The shares of the company are available for trading purposes in the market. Right? For example, in BSE, Bombay Stock Exchange, the shares are available. The National Stock Exchange, the shares are available, etc. Right? So whenever the shares are available in this market, that company is essentially called as a listed company. Right? There are thousands and lakhs of companies which are listed. Now this company has a certain amount of shareholders. They have certain amount of shareholders. For the existing shareholders, the new shares are issued. I'll repeat the statement. For the existing shareholders, new shares are issued. For example, a company will announce, they will basically say, for every 1 share, I will issue 1 additional share. Let's assume 1:1. For every 1 share that you're holding, I will issue 1 bonus share. Which means, imagine, there is a shareholder. Let's assume I'm the shareholder. I'm having 30 shares of this company. And you are one of the shareholder. You have 50 shares. Right? Let's assume Srinivas, who is commenting listed in BSE or NSE. Srinivas is also holding 100 shares. Now, when the company announces 1:1, what does it actually mean? If I'm holding 30 shares, there will be additional 30 shares issued to me. If Srinivas is holding 100 shares, additional 100 shares, bonus, new 100 shares will be issued to Srinivas. If third person has 50 shares, additional 50 shares will be issued to the shareholder. This is essentially the concept of bonus issue. Is everybody okay? This is essentially a concept of bonus issues. Why does the company do that? The company might simply say, we want to reward the shareholders. We want more shares to be there in the market. Right? We, rather than giving dividends, right, I'll basically issue these kind of shares, etc. And please understand, this example that I've taken is to make you understand. This example that I'm explaining is to make you understand. doesn't mean that always it is 1:1. I hope you understand this as well. It doesn't mean it is always 1:1. No, the company will decide. The company might simply say, for every 2 shares you are holding, I will issue 1 additional share. That is a bonus share. For every 5 shares you are holding, I'll give you 1 share. That is 1 bonus share. So it is all dependent on the company that is issuing the shares. I have taken this example just to make you understand. Is it okay? Is the logic okay? But listen to me carefully. Some of you will get confused between bonus issue and rights issue. Bonus issue and the rights issue. Right? Some of you will get confused between both of them. In rights issues, the company will offer the shares in the same proportion to the existing shareholders. What is the meaning of it? Right? Let me give you an example here. Let's imagine there are 4 shareholders, A, B, C and D. A, B, C and D. A has 10 shares, B has 20, C has 30, D has 40 out of the total 100 shares. Again, just a hypothetical example. Out of total 100% of the shares, A has 10, that is 100 shares, right? A has 10, B has 20, C has 30, D has 40. Right? So this is the ownership stake right now. Under the rights issues, the company wants to issue additional 200 shares. Additional 200 shares. Now the first preference is given to the existing shareholders. Is everybody able to understand? The first preference is given to the existing shareholders. It is entirely the prerogative of the shareholders whether they want to purchase, underline the term, whether they want to purchase the new shares or not. And the shares which are offered in the same percentage of existing ownership. The same percentage in the sense A has 10% ownership. So out of 200, 20 shares will be offered to A. B has a 20% ownership. So 40 shares will be offered to B. Right? So the shares, the new shares will be sold to the existing shareholder. What if the existing shareholder doesn't want it? They will be sold to some other investors in the market. But in the bonus issue, there is no option such as, right, basically they're selling. No, the company is not selling. The company is simply issuing the shares, new shares, bonus shares to the existing shareholders in a certain, right, proportion. They might simply say, for every 1 share, I will give you 1 share. They might simply say, for every 10 shares, I'll give you 1 share. They might simply say, for every 5 shares, I'll give you 1 share. You are not buying. The company is giving you 1 additional share like this. That is essentially the concept of bonus issues. Is everybody okay with the concept of bonus issue, rights issue, etc.? So in bonus issue, once the shares are issued, right, I hope you understand, the number of shares increase. The total number of shares will increase. The percentage of the ownership doesn't change. The number of shares will increase. Right? And when the number of shares increases, generally what we expect is the supply of shares in the market, if it increases, total number of shares increases, market prices should go down. Right? So these are certain important points associated with the concept of a bonus issue. Why would they do that? Instead of giving dividends, they might give you bonus shares. Simple. Instead of giving you dividends, they might give you bonus shares. That is essentially the concept of bonus issues. Can we move on to the next one now? Done? Everybody is okay with the idea of a bonus issue? Next is QIP, Qualified Institutional Placement. Qualified Institutional Placement. QIP stands for Qualified Institutional Placement. What is this idea of a qualified institutional placement? Again, go back to the basics. A listed company. There is a company which is listed. Now, this particular listed company wants to issue more shares. They want to raise more capital. There is a term called as private placement. There is a term called as private placement. Under private placement, essentially there are 2 types. One is called as Qualified Institutional Buyers, QIB, Qualified Institutional Buyers, and Qualified institutional placement. Is it okay? Qualified institutional buyers, qualified institutional placement. What will happen under the concept of qualified institutional placement? Right? Essentially, under the qualified institutional placement, the investors, such as various institutions, for example, it could be mutual funds company, it could be insurance company, it could be any other, right? Let's say hedge funds, etc. Various institutions will be sold or will be issued with the shares. These will be issued with the shares by the company. Is everybody okay? Focus on the discussion now. If you have doubts, I'll address it later. Focus on this discussion. Because you're typing doubts associated with the previous topic, you will miss out this topic. Then you'll ask, sir, what happened here? Right? Focus. If you have doubts, I'll take up at the end of the session like I always do. Have patience. So under the private placement, what do you mean by private placement? Why it is called as a private placement? You can essentially go to the market and issue to lot of investors. For example, can you go for, let's say, the follow-on public offering, FPO? Can you go for a follow-on public offering? That is essentially ask various investors in the market to subscribe for these particular shares and purchase. But that is a time-consuming process. Under the follow-on public offering, you will have to spend a lot of time. There is a lot of documentation involved. There is a lot of, let's say expenditure involved, because you will have to appoint certain experts for this. You will have to appoint merchant bankers, etc. So rather than going for a public issue, this is essentially a public issue. Rather than going for a public issue, what will you do now? You will basically go for a private placement. Private placement essentially means you will not follow the normal procedure as it is under the public issue. You will issue these particular shares for limited number of investors. Right? For example, in public issues, retail investors are present. The retail investors are present in public issues. But in private placement, they are not present. Retail investors generally are not present in the private placement. For example, look at the term here, qualified institutional placement. When you say institutional placement, don't you think by default, you and me, who are the retail investors, by default, we will be excluded from the process, will not be part of the process. So that is the basic argument here. Right? So there is a process called as a private placement. Under this, the State Bank of India very recently has conducted a private placement wherein it has used a qualified institutional placement to sell certain shares to the institutional investors. And this became important because one, the concept, and the second one, it is one of the largest institutional placement by size of the issue. One of the largest institutional placement by the size, by the value of the issue that was done by State Bank of India. Right, so this was also there in the newspaper. Please brush your financial market concepts. This is something new in the context of the financial market, which has taken place in the last year. Next, the idea of electricity futures. The concept of electricity futures. Okay, Harsh Chandrasekhar is still saying that there is a network issue. My dear, the point I'm trying to convey here is, I have a monitor in front of me. So in front of me, in my monitor, there is absolutely no issue as far as I can see. Just a second. Okay, there is no issue. I've checked even the, let's say the YouTube analytics, there is absolutely no issue. It says the stream health is excellent. Okay, please check from your side. There might be issue from your side. Please check. Okay, let's go forward. Electricity futures. For the first time, NSE as well as MCX. NSE and MCX have been given the approval from SEBI, Securities Exchange Board of India. Right, so Securities Exchange Board of India has given approval for NSE as well as MCX. NSE stands for National Stock Exchange, right? MCX stands for Multi Commodities, right? Exchange, right? MCX. It has given approval for both of them or both of these to start introducing the electricity futures, which has already taken place. By the way, what is the basic idea for electricity futures here? I'm pretty sure all of you know that there are a lot of issues in India's power sector. Correct? Lot of issues in India's power sector. And one of the issues is the financial health of the power sector companies. The financial health. You talk about the generation companies or the companies which are supplying electricity, a lot of them incur losses. You talk about the discoms, the distribution companies, a lot of these particular discoms are also incurring losses. So there is always a concern associated with the financial health of these particular companies or the entities involved in the electricity or the power sector. Now, one of the reason why it happens, one of the reason is, let's assume there's a discom. The discom wants to purchase electricity throughout the year. But don't you think if the discom doesn't plan correctly, listen to me carefully, if the discom doesn't plan correctly, it will end up paying very high amount of money for every unit of electricity that it will purchase during summer. And on the other side, think of generation company. Generation company, it is producing electricity, it is selling electricity in the market. If there is no clarity regarding what is the price of the electricity, there might be a situation, and this is common by the way, there might be a situation wherein the supply of electricity units to the market has increased and the demand comparatively has not increased. It will happen during certain periods of time where the demand will be lesser, supply at that point could be higher. So suddenly the spot price, the term is spot. Spot means right now. Spot means right now. Futures essentially talk about what is the price in the future. Spot means right now. So in the spot market, suddenly the market prices will fall. So the argument is because there is no proper market where both of these, that is the discoms, the buyers, the sellers, there is no market right now which can protect these kind of entities from the volatility of the market prices. There is no market. We have a spot market right now. Spot means you buy and you sell and you pay money. That is spot market. So that is essentially the reason why the electricity futures now have been introduced in NSE and MCX. Futures is a type of contract under a derivative market. Here comes the most difficult part, which I'm pretty sure most of you have faced difficulties. Derivative market. All of you heard of the term derivative? What is a derivative? It is essentially a contract, or let's say it is essentially an instrument which will derive its value from underlying asset. The instrument on its own doesn't have value, but it will derive its value from an underlying asset. The most important derivatives for you, again, from the market perspective, will be futures and options. F and O. Futures and options. Right? So in the context of electricity sector, now the electricity futures are allowed to be traded. Electricity futures will be allowed to be traded. What is the use of this? Let's take one example. Just understand. Let me take one example. If there is a producer and supplier of electricity, the producer and supplier of electricity, they will essentially enter into the futures contract with another party. They will essentially enter into a contract with another party. What is the contract? The supplier essentially will enter into a contract saying that the prices of the electricity after, let's say, 30 days will be this much. If the price will go down, they will be protected. If the price is lower, they'll be protected. So the same applies to the discom as well. They are worried that after 30 days, the prices might hit 10 rupees per unit. But they will enter into a contract by simply saying that the price will be, let's say, 7 rupees or 8 rupees. So at that particular price, they will take the delivery. So essentially, this particular futures market, understand the logic. I don't want to get into how the futures will work. right? How the contracts are designed, how the delivery will happen, etc. For that, you will require another 2 hours to make you understand the derivative market. Simple argument. The futures are contracts which will essentially help the buyers and seller enter into the pricing agreement, right, on a future date. On a future date, what will be the price? The price agreement will be entered into contract today, which will help protect themselves, which will essentially help them hedge against the risk in the future. Right? That is essentially the importance of electricity futures market. So I'll just repeat the whole thing again here, just in a nutshell. Right now, until the electricity futures were allowed to be sold by SEBI to MCX and NSE, we had only spot market. We had only spot market. Now futures market also has been introduced. In futures market, the buyers, sellers, right, traders, etc., they will essentially enter into a contract regarding what is the price of this particular product in the future. Right? So this will help basically hedge against the future risk. Hedge means protect yourself. Hedge means escaping from the risk. It will help in hedging the risk in the future. Just remember this particular terminology. Done? Okay. Can I move on to the next concept now? Right, next one, CPI-AL base year has been revised. CPI-AL base year has been revised. What is the basic idea? Those who have attended today's Hindu newspaper analysis, you will know the base year has been revised now. The new base year has been introduced. But don't worry about it. We will cover that later. When I cover January 2026 to, right, let's say March, April 2026, I'll cover that there. One more important newspaper article, current affairs concept you should remember is, there is one more indicator called as CPI Agriculture Labor. CPI Agriculture Labor. CPI-AL they'll say. CPI-AL. This is published for every month by Ministry of Labor, specifically Labor Bureau. Specifically Labor Bureau. Published for every month. But the problem so far was, the CPI-AL, I'm simply saying AL, there is also one more indicator associated with this. They will write like this, CPI-AL bar RL. RL stands for rural labor. AL stands for agriculture labor. Agriculture labor basically is a narrow concept. Rural labor is a broader concept. Because within rural labor, there will be agriculture labor. Anyways, come back to the concept here. CPI-AL and RL, the base year earlier was 86 and 87. Mind you, 86 and 87. We were using the base year of 86 and 87 to calculate CPI-AL in 2025. So you can imagine, right? The base year was so old. The base year was very, very old. So Government of India last year has announced that the base year for CPI-AL will be changed, and now the base year will be 2019. CPI base year, that is CPI-AL base year, will be 2019. And with the change in the base year, automatically the basket will also change. Is the point clear? With the change in the base year, the basket will also change. Basket means the commodities for which the prices are tracked. The basket has been restructured. Earlier, the CPI-AL was calculated for 20 states. Now this has been expanded to 34 states and union territories. It has been expanded to cover 34 states and union territories. That is, the basket is much more wider now. The coverage for the data collection is also much more wider, 34 states and union territories. And what is the use of the CPI-AL, by the way? Why should we keep on revamping the CPI-AL? What is the use of this? The use of this is simple. CPI-AL is an indicator that is used by the government to revamp or adjust Manrega wages. Of course, now Manrega will become G-Ramji. Let's wait and see what will the government will do with this indicator. But anyways, this particular CPI-AL earlier was used to basically revamp. Every year the Manrega wages would be revised. So this revision of the wages would be done using the CPI-AL indicator. Is everybody okay? And for creation of the basket, the government essentially has used the household consumption expenditure survey results of 2011 and 2012. That is the 68th round HCES of 2011 and 2012. So these are certain very important points associated with the CPI-AL. Again, I am saying there is CPI-AL, right? There is a CPI-IW. All of you heard of CPI-IW? Please tell me what is the base year for CPI-IW? Let me know. What is the base year for CPI-IW? What is, right? What is the basket of CPI-IW? Those present, please do let me know. Nobody is answering, by the way. 2011 and 12. Aman Singh is saying 2016. 2016. Okay. What is the size of the basket? What is the size of the basket? Size of the basket consists how many commodities? Shekhar Sank and one more person, you are saying 2011 and 12. Please check. It's not 2011 and 12. Lakshmi, it's not 2011 and 12. Okay. So what is the size of the basket? Most of you are typing, right? Let's say the base here. The size of the basket is 463 commodities. 463 commodities. 463, right? Can be asked in the UPSC examination, prelims especially. Please memorize all of it. And the use of CPI-W is essentially to make revision, right? Revision of basically the allowances. Allowance revision. For adjusting for inflation, the government will keep on announcing relief, right? Dearness relief, etc. That will be done using CPI-IW. These are important points. Please remember all of them. Okay, let's go forward. Next article. AU Small Finance Bank gets RBI nod for Universal Bank. AU Small Finance Bank, SFB. AU Small Finance Bank gets nod from RBI to become a universal bank. This is the first bank in the last 1 decade to get a license. I repeat, to get a license to become a universal bank. Is everybody okay? This is the first bank in the last 1 decade to get a license from Reserve Bank of India to become a universal bank. That's the reason this becomes important. Right now, RBI uses a concept called as on-tap licensing. On-tap licensing. On-tap licensing. And this concept of on-tap licensing was introduced by RBI back in the year 2016 when RBI introduced continuous authorization policy. Continuous authorization policy. Right? Somebody will ask me, sir, in that case, what was the policy used by RBI before 2016? Before 2016, RBI used to follow basically a policy which was referred to as stop and go. Stop and go policy. And this was introduced post 1991 based on the recommendation of Narsimham Committee. And I know somebody will ask me, in that case, sir, what was there before 1991? My dear, right? I hope you understand. Before 1991, the government used to go for nationalization. But anyways, come back to the discussion here. So post 1991, we introduced stop and go. That is, RBI would announce a specific window, time period, within which you would apply for a banking license. And post 2016, right, the RBI introduced a continuous authorization policy under which they introduced the concept of on-tap licensing. Under on-tap licensing, there is no date. There is no specific time period for you to apply for a license. Anytime, anybody wants a banking license, they can go to RBI, submit an application. But that doesn't mean that RBI will give you a license. Is everybody able to understand? Anytime you can simply go and apply for a license. RBI will take its own sweet time to decide whether to give you a license or not. In many of the cases, it has taken 2 years, 3 years for other types of bank licenses, not universal, other type of bank licenses. Right? So argument here is, now RBI has issued for the first time ever a universal banking license for a small finance bank. Right? For a small finance bank. But please understand, to apply for a license, you are a small finance bank. To apply for a license for a universal bank, are there any conditions? RBI simply says, these are the conditions. If you meet these particular conditions, only then you become eligible for applying for a universal banking license. The conditions are, it should be having a scheduled status. Scheduled status means it should be registered under Schedule 2 of RBI Act of 1934. It should have a performance which is satisfactory with a track record of at least 5 years. It should be listed on a stock exchange. A minimum net worth of 1000 crore rupees at the end of the previous quarter when you're applying for a license. The prescribed CRAR, that is capital adequacy ratio, requirements for the small finance bank with a net profit in the last 2 financial years. The capital adequacy ratio for a small finance bank is 15%. You are supposed to meet that particular number. These should be profitable, right, in the last 2 financial years. Once you meet all these particular conditions, only then you become eligible for applying for a universal banking license. Done? These are the important points. Can I move on to the next topic now? Simran is asking benefit of universal bank. My dear, universal bank can conduct primary functions, secondary functions and many other functions. A small finance bank has very limited functions. It has very limited functions. For example, a small finance bank has to meet a PSL criteria of 60%. For universal banks, it is 40%. A small finance bank has to basically maintain certain let's say branching requirements. For universal bank, it is different. So having a universal bank or being a universal bank will give you more opportunities compared to working as a small finance bank. Done? Everybody is okay? And that is essentially the sequence. The RBI will basically tell you to work as a payment bank first. Then it will give you a small finance bank license. Then it will give you a universal bank license. It doesn't directly give you a universal bank license because you're dealing with people's money. You're dealing with money of the people, right? So what is your interest? That is not paramount for RBI. RBI wants to check whether you have the right expertise or not. For example, yesterday also I was mentioning this. RBI for the last 2 decades, has not given any license for urban cooperative bank. Now they are considering to issue licenses for urban cooperative bank. Right? So it is entirely dependent on RBI's decision because RBI is the regulator of the banking sector. Okay, let's go forward. National highway tolls. National highway tolls. Right? Why is this important? In the last 1 year, especially in the last couple of months, there has been a lot of discussion associated with toll policy. Right? Toll. That is how much tolls you pay when you use national highways. How much tolls you pay? What is the methodology that is used by the government to decide the tolls, etc.? Listen to me carefully. Whenever the national highways are maintained by the government essentially means the government has the control over the national highways. The government decides the tolls. And is there any act, any provision that the government will basically quote and decide the tolls? And for what duration? Currently, the government of India has introduced a policy where the tolls are being implemented till perpetuity. I hope you understand this. And one of the standing committees looked at this particular policy and it has criticized the policy. Right now, the NH tolls implemented by the government are till perpetuity. That is, government will keep on implementing the tolls, collecting the tolls from you people. So under what powers can the government of India decide the toll and collect the toll? Remember this particular section, Section 7 of National Highways Act of 1956. Just remember the number. Section 7 of National Highways Act of 1957. Under this particular section, the government is empowered to levy fees for services or benefits rendered on the national highways. On the national highways. And how does the government generally decide the tolls? Government generally takes a certain percentage increment. From 1 year to the next year, there is a certain increment. Increment in the sense, let's say 3%. Imagine the toll, currently it is 100 rupees. Out of 100 rupees, again, just to make you understand. I don't want you to learn calculations, etc. Just understand the logic. Out of 100 rupees, let's say 60 rupees will be, let's say based on the increment. That is 3%. right, 60 rupees will be increased by 3%. That will become how much? Right, 3% of 60 rupees will be 1 rupee 80 paisa. So 61.80 paisa. Remaining 40 rupees is connected with WPI. Remember this as well. Remaining 40 rupees is connected to WPI, wholesale price index. So in the last 1 year, what was the WPI? Let's say hypothetically 6%. So this 40 rupees will be increased by 6%. That essentially will become 6 4s are 24, 42 rupees 40 paisa. So the new toll will be decided like this. Is everybody able to understand? Again, I'm saying do not run behind calculations. UPSC will not ask you this. Do not run behind calculations. But the toll rates from 1 year to the next year, a certain percentage of it will be increased with a fixed number, and remaining part of the toll will be increased by the WPI number. It will be increased by whatever is the WPI inflation rate. So this is how from 1 year to the next year, the government will decide the toll rates. Is everybody okay? The government has formulated the National Highways Fee Rules 2008, and based on this, the government keeps on revising, revamping the toll rates. Can I move forward now? Are Baba, those who are worried about numbers, again I am saying, why? Why are you worried about numbers? Certain part of the toll, they will automatically increase. Right? The number is decided. By how much percentage, the number is decided. Remaining part of the toll, they will increase it by the WPI number. That is wholesale price index number. Just understand this. Why are you worried, sir? Why should you take 3%? Why should I take 6%? Why should I take 10%? No worries. UPSC is not going to ask you this calculation. But idea is simple. Part of it increased by a fixed number. Increment is fixed. Part of it is increased by WPI inflation. Okay? Right. So Section 7, National Highways Act of 1956, increase, right, is done annually by the government like this. Okay, let's go forward. Next article, Sustainable Aviation Fuel. Sustainable Aviation Fuel. Right, what is the importance of sustainable aviation fuel? The government of India basically is promoting the idea of becoming net zero emission by 2070. Correct? Net zero emission by 2070. And to achieve the objective of net zero emission by 2070, multiple initiatives have been implemented. And one of the areas which contributes, I repeat, one of the areas which contributes right, to the emissions that are caused is the transportation. And within transportation, you have aviation. Within transportation, you have aviation. Okay? And somebody is saying, but sir, in 2025, calculation was asked. My dear, please check the question. How difficult or how easy was the calculation? Please don't take 1 year's example and start running with that as a norm. Don't take that as a norm. Yes, calculation was asked, but even without doing any manual calculation, you could have solved the question. Okay, so one of the areas is civil aviation. Now, under civil aviation, please remember, Indian Oil Corporation, IOC, has become the first company in India to produce a sustainable aviation fuel. Sustainable aviation fuel. What is the idea for sustainable aviation fuel? I'm pretty sure all of you heard of E20 blending program. The government of India has announced National Biofuel Policy. National Biofuel Policy. This was announced back in the year 2018. And under the National Biofuel Policy, it is basically promoting blending of petrol and diesel. Correct? Blending of petrol and diesel. Now, this particular petrol and diesel will take care of the transportation. That is road transportation. The vehicles which are using the, right, let's say petrol and diesel, cars, right, let's say the two-wheelers, etc. Essentially, they will be covered there. What about aeroplanes? What about aeroplanes? Aeroplanes also use lot of fuel, aviation turbine fuel. So is there a blending program within this particular aviation turbine fuel? And that is sustainable aviation fuel. Simple. For aeroplanes, we have sustainable aviation fuel, SAF. Right, so sustainable aviation fuel is basically produced using food products, right, agriculture products, right, the waste, etc. So this particular fuel is being produced in India, and this is the first company in India to produce SAF. The government of India simply says by 2027 we will have 1% blending. The target is simple. By 2027, we will have 1% blending in the aviation turbine fuel. And by 2030, the target is 5% blending. Right? And this particular entity, Indian Oil Corporation, has been given the certification by one more entity called as ISCC Corsia certification. Memorize this. Please memorize this. ISCC Corsia certification. This is basically an international certification program. What is the use of this? If you are selling a sustainable aviation fuel, whether it is meeting the standards or not, there is a certification authority. And this authority is ISCC Corsia certification. Done? Everybody is okay? Full form of ISCC, International Sustainability and Carbon Certification, and Corsia stands for Carbon Offsetting Reduction Scheme for International Aviation. Please memorize all of this. Can be questioned in the preliminary examination. Can be questioned in the preliminary examination. Done? So this is associated with the sustainable aviation fuel. Let me go forward now. OECD Crypto Reporting Framework. OECD Crypto Reporting Framework. Right? India essentially has stated that it will implement OECD, that is Organization for Economic Cooperation and Development Crypto Asset Reporting Framework, CARF, from 1st April 2027. What is the importance of this? What is the logic behind it? Listen carefully. In India, there is always a concern associated with investments in crypto. Investments in crypto. Why? The government of India as well as Reserve Bank of India argue that the crypto investments can be used for money laundering purposes. Correct? For money laundering purposes, the investments can be investments can be used. And the crypto investments can also be used for terrorist financing activities. And the government is also worried that lot of loopholes in the taxation methods or taxation procedures are being abused by the investors, where they are investing in crypto market, but they are not disclosing this particular information to the government. And if you're wondering, sir, why should they disclose? You will be worried, sir, it is my money. I don't want to disclose anything. Why should I disclose it? The government of India imposes a taxes on crypto transactions. Simple. The government of India wants you to disclose because they want to impose taxes and collect, and they want to ensure that you are revealing all the investments that you're doing in the market in the right way. In India, if you're investing in India, very recently, the FIU, Financial Intelligence Unit, which had announced certain norms back in 2023, has updated the norms. Correct? All of you know this. And again, we will cover this when I take up January to April. Don't worry. Very recently, the Financial Intelligence Unit under the Ministry of Finance has come out with anti-money laundering, AML, anti-money laundering and KYC norms or KYC framework, under which if you are investing in India's crypto exchanges, the crypto exchange service providers will have to report the information to the Financial Intelligence Unit. There is no option now. These guidelines have been implemented. But the concern arises, what if I'm taking the money from India and I'm investing outside India? Again in crypto exchanges. All of you able to understand? What if I'm taking this particular money from India to external market and I'm investing in the external market? Right? There, how will the government of India come to know? Right? How will the information be provided to the government? You will say, sir, I'm a taxpayer. I will submit the information. But what is the guarantee that the information that you have provided is correct. What is the guarantee? What is the guarantee that you will disclose all the information to the government? And that is where these kind of reporting frameworks will come into picture. Right? Varun Kumar, FIU functions under the Ministry of Finance. Ministry of Finance. Right? So in that particular case, this kind of a framework will come into picture. So India has signed OECD crypto reporting framework, and this will be implemented from 1st April 2027. And what is the importance of this particular framework? The crypto services or crypto exchange service providers, now if any Indian resident, I repeat, any Indian resident is going to invest in these offshore crypto exchange markets, they will convert the cryptos into fiat, fiat into cryptos, they will sell cryptos, they will buy cryptos, they will transfer cryptos. All of this information now automatically will be provided to the government of India. Is everybody able to understand this? All of this, now this information will be provided to the government of India. Right? This is essentially the importance of OECD crypto reporting framework, which will come into force from 1st April 2027. Is everybody okay? Can I move on to the next article? Do let me know. Sir, why 2027? It can be implemented in 2026. My dear, whenever these kind of agreements are signed, you need systems in place. You need proper procedure, etc. It doesn't happen overnight. It doesn't happen overnight. For example, you can raise the same question, sir, Income Tax Act. Why is the income tax applicable from the next financial year? Why not bring it into place in this financial year? It will take certain time for you to make or prepare the systems. Right? It will take a time period. So that's the reason generally they will choose beginning of a financial year. The government in this case has used the financial year, that is the next financial year. How actually the report collected such data, which, my dear, if you're going to forget about crypto market, think about stock market. If you invest in the stock market, if the government of India will tell all the brokers, all the stock exchanges, whoever is investing in the stock market, I need information regarding that. Don't you think government will be able to understand whether you, when you report to the government, when you file the income taxes, whether you have provided the right information or wrong information? Think like that, right? Okay, anyways, let's go forward. Renewable energy. Important, renewable energy. The renewable energy capacity has reached more than 250 gigawatts. It has reached more than 250 gigawatts. Installed capacity is more than 250 gigawatts. What is the importance of this? All of you heard of Paris Climate Agreement? Do let me know in the chat section. Paris Climate Agreement. Right, back in the year 2015. In the Paris Climate Agreement, there was nationally determined contributions, NDC, where the member countries would basically, right, come forward and decide what is the target they want to achieve. The member countries would basically come out with targets they want to achieve. So under the nationally determined contributions, multiple targets were set up by Government of India. And one such target was to ensure by 2030 that more than 50% of the total electricity produced in India will essentially, total installed capacity will come from renewable energy sources. Right? So Government of India has already met that particular target. It has already met that particular target. So renewable energy capacity has reached 250 gigawatts. It is more than 250 now. The total installed capacity is 500 plus gigawatts installed capacity. Out of that, more than 250 gigawatts is the renewable energy capacity. Out of the renewable energy capacity, UPSC can ask you to arrange in terms of installed capacity. Please remember, highest is the solar. Highest is solar, 123 gigawatts. Highest is solar, 123 gigawatts. So please remember this. Remember the sequence also. They might simply ask you to arrange them in either ascending or descending order of installed capacity. Again, I'm using the term installed capacity with emphasis. Reason being, installed capacity is not equivalent to the total amount of electricity produced. All of you able to understand? Out of the total electricity produced in India, majority of the electricity that is produced even today comes from thermal. Even today comes from thermal. Reason is very simple. Thermal plants can be run throughout the day. You can run the thermal power plants throughout the day. Whereas in case of renewable energy, there is a problem of intermittency. There is always a problem of intermittency. Intermittency means you cannot produce electricity throughout the day or throughout the year for that matter. Right, so important points, please remember. In addition to this, the GST on the renewable energy devices, has been reduced to 5% now. Earlier it was 12%, now it has been reduced to 5%. Again, one more initiative of the government to basically promote renewable energy production. 5% is the GST. Third important point associated with the renewable energy sector is the term ALMM. What is ALMM? Approved list of model manufacturers. Approved list of model manufacturers. Right? What is this basic idea for approved list of model manufacturers? The government of India has implemented ALMM for solar panels. It has announced ALMM for solar cells. It has announced ALMM for wafers. It has announced the ALMM for wafers and cells. It has implemented ALMM for solar models or solar panels. The basic idea for ALMM is that the government will publish a list. If you are any entity which is implementing a solar project under the government of India, if you are implementing this particular project, then you will have to purchase the solar panels from these approved list of the government. Is my point clear to all of you? Please do let me know. Is my point clear to all of you? You will have to purchase these particular solar panels only from this particular list which has been published by the government. And what is the importance of that? The importance is simple. This will ensure there is a demand for solar panels by the producers who have produced them in the Indian market. This is important for a simple reason. We are heavily import dependent. We import a lot of these particular solar panels from China. So government of India wanted to promote production of this. Hence, ALMM has been published. But with the publication of ALMM for panels, import of cells increased. Now government simply says, I will have ALMM for cells as well. As a precaution, it has announced ALMM for wafers as well. And those who are wondering, sir, what is the connection of all of this? Sequence is very simple. First you have silica. Using silica, you will produce wafer, right? And before that, ingots are produced, wafer is there. And then you produce cells, and then you using cells, you will produce panels. So ALMM on panels already implemented. Then we have announced, right, the ALMM on cells. We have announced ALMM on wafers as well. Done? Can we go forward now? Right, these are important points. In addition to this, also remember, a lot of these, the areas associated with renewable energy are even covered under PLI. For example, advanced chemical cell batteries, these are covered under PLI, by the way. Solar, covered under PLI. Please remember, all these are the reforms or the initiatives undertaken by the government to essentially promote renewable energy or essentially move towards the goal of net zero emission by 2070. Okay, let's go forward. Infosys board approves buyback of the shares worth 18,000 crore rupees. Right? Infosys board approves buyback of shares worth 18,000 crore rupees. What is this idea of a share buyback? Listen to me carefully. There is a particular company, let's say ABC, a listed company. This listed company has issued shares to the investors in the market. There are a lot of investors who have purchased and are holding the shares of the company. Now, this company will repurchase the shares, will repurchase the shares of the company. This is essentially called as buyback of shares. Buyback of shares. Why does the company do this? What is the logic behind it? The company might simply say the valuation of the company is very less because too many shares are there in the market. If there are too many shares in the market, obviously the market prices of the shares would be lesser. And how do you calculate a market capitalization of company? Market capitalization of the company is calculated by taking the market price of the share into the number of the shares there in the market. That is the shares which are not held by promoters. Essentially, the technical term is called as free float of the shares. Right? So in the context of Sensex, we use the free float. If you want to simply calculate the market capitalization of a company, simply market prices into shares. So the company might simply feel we have lot of money with us right now. The shares of the company are too high in the market. The valuation of the company is lesser. So what we will do? We will use the sum of this money to repurchase the shares. Reduce the amount of the number of shares in the market that is expected to improve the valuation of the company. And if the number of shares in the market automatically go down, supply of the shares in the market is lesser, the market prices would be higher or would start improving like this. Right? So there are multiple objectives with which the companies like this essentially go for the share buyback. So what are the types of buybacks? Essentially there are two types. One is called as a tender offer. Second one is called as a open market purchase. What happens in a tender offer? The company will offer to repurchase from the shareholders at a particular premium price. The company will announce this. They will say we want to purchase these many shares in the market, right? And this is the price we are going to pay. If the market price is, let's say, 50, we will pay you 52 rupees, 54 rupees, and these are the number of shares. Those who want to sell, here is the form, fill it and submit it. We will purchase it. That is essentially called as a tender offer. This is one method. What is the other method? Open market purchase. That is, under this, the companies will simply buy back the shares from the stock market. Right? Let's say they will use a broker. They will go to the market. The companies, right, essentially will pay the money and directly from the stock market will start purchasing the shares at the prevailing market prices. Whatever is the market price in the spot market, they will simply pay it and purchase the shares. So these are broadly the most important or two main types of share buybacks. Right? And the company Infosys has conducted a buyback, one of the very rare instances in the recent times. Okay, share buyback is a common concept, but one of the largest companies in India going for a share buyback in recent times. That's the reason this becomes important. Can we move forward now? E-Kuber, my dear, E-Kuber is used by the Reserve Bank of India. Not E-Kuber. E-Kuber is used by Reserve Bank of India, and that's a primary market. Right? For example, Bombay Stock Exchange, that's a secondary market. Right? For example, let's say there is a broker. I will tell the broker, please purchase 100 shares from the stock market. Right now, go to the stock market, purchase it. So the broker will purchase, I'll pay the money, and the broker will transfer the shares to me. I'm the company. Right? Directly from the secondary market, they can purchase. That is basically the spot market. Okay. Let's go forward. WTO agreement on fishery subsidies. I'll come back to this. Just give me a minute. Let me cover this first, then I'll go back to the previous article. The WTO, China gives up SDT benefits. China gives up SDT benefits. What is the meaning of SDT? SDT stands for the special and the differential. Rather than writing it, I will highlight it, underline it. It is there here. Special and differential treatment. SDT stands for special and differential treatment. it will be written as SDT, or else it is also written as S and D. In the prelims examination, they can use either of the acronyms. Please do not get confused. S and D or SDT, special and differential treatment. What is this idea of a special and differential treatment? Under WTO, we divide the countries, correct? We divide the countries. You have developed countries, you have developing countries. For example, USA is a developed country. India is a developing country. China is a developing country. Right? Many of the African countries are least developed countries. But listen to me very carefully. Unlike IMF, some of you are writing about IMF definition. Unlike IMF, under WTO, there is no methodology to find out which is a high income country, low income country, or middle income country. Under IMF, we essentially divide them into high, low, and middle. Under WTO, we divide them into developed, developing, and least developed countries. In IMF, there is a parameter. There is a parameter, that is per capita national income. Under WTO, it is self-declaration. Remember the technical term. It is self-declaration. That is, the member countries themselves declare, right, whether they are developed or developing. They themselves declare. Right? Many of these particular countries, USA, they have declared themselves as developed. India has declared itself as developing. China has declared itself as developing. And what is the benefit of this particular declaration? Under the WTO guidelines, there is a concept of special and differential treatment. If you are a developing country or a least developed country, you will be covered under SDT, special and differential treatment. And the moment you are covered under SDT, you will get lot of benefits. What kind of benefits? For example, let's say there is an agreement. For implementation of the agreement, you will be given more time period. All of you able to understand? You will be given more time period. For example, just to make you understand, let me take up one more concept here. WTO agreement on fishery subsidies. This agreement initially was signed a couple of years ago, 22. It was signed back in 22. But please understand, whenever these kind of agreements are signed, these agreements generally require certain minimum number of countries to ratify them. It is not automatically implemented. It will require certain minimum number of countries to ratify the agreement. So this particular agreement, which was signed couple of years ago, required minimum two-thirds of total number of WTO members to ratify this. That is, out of 166 members, you required two-thirds to ratify. Right? So now, with many of these particular countries ratifying, we have been able to meet the number. And because we have been able to meet the two-thirds threshold number, that is the member countries to ratify this, the WTO's agreement on fishery subsidy has come into force. It has come into force now. Is the point clear to all of you? But look at the benefit I'm talking about. What is the provision under this? I'll tell you. But look at the benefit I'm talking about. Under SDT, if you're a least developed country, then certain relaxation is provided under agreement on fishery subsidy. What kind of relaxation? You will be given 2-year time period in order to meet the conditions under the fishery subsidies. You are given relaxation. You are given more time period in order to meet the conditions under the fishery subsidies. So everybody is able to understand the logic here. So I'll come back to this. Do not panic. I'll come back to this. Let me complete this. So once you are covered, or once you have declared yourself as a developing as well as a underdeveloped or least developed country, you are covered under special and differential treatment. What kind of benefits you will get? WTO will provide lot of assistance to you to develop systems. They will train your people, etc. The WTO will give you more relaxations in terms of implementation of many of these particular guidelines. The WTO, under that, the developed countries can provide you benefits in terms of reduction in tariffs. In terms of reduction in tariffs. For example, please do let me know. All of you heard of GSP? Generalized System of Preferences. What is the idea for GSP? Generalized system of preferences. Under the generalized system, developed countries will provide certain benefits when they conduct a trade with developing country. Donor country and beneficiary country. What do you mean by that? India, let's say, is identified under the GSP, is given GSP benefit by another country. And there are multiple countries which provide GSP benefit to India. USA has withdrawn this. When the president, Mr. Donald Trump, was the president in the first term, 2016 to 2020, the GSP benefits given to India, recognition has been withdrawn. But essentially, what is the idea? Under the GSP, once you're recognized, if you export a product, if you are not given GSP benefit, the rate that would be applicable would be, right, let's say the common rate. That is most favored nation rate. MFN rate would be applicable. But because you are covered under the GSP, the developed country will reduce the rate below the MFN rate, will give you exemption in the tariff there. So these kind of benefits are provided to the member countries under SDT. Now, why it was there in the newspaper? China has announced that from next year, it will give up the SDT benefits. Is everybody able to understand? China has announced that from next year, it will give up the SDT benefits. But again, does it mean that it is giving up a developing country status? No. It simply says, I will continue to remain a developing country. I'll remain under the same classification. But going forward, any more benefits you want to provide to me under the SDT, I will not receive the benefits. In fact, there is also pressure on India. There is a pressure on India, especially from developed countries such as USA, to declare itself as a developed country and forego the SDT benefits. There's a pressure, but that debate will essentially become part of your mains preparation. Let's continue here. WTO Agreement on Fishery Subsidies. There are two parts to this particular agreement. There are, I repeat, two parts to this agreement. One part has come into force now. The second part is yet to be implemented. Why? Member countries are not okay with the second part. What is that? I'll tell you. But the agreement simply says, in the next 4 years, there has to be an agreement on the second aspect of the agreement. What will happen if there is no agreement on the second part of the fishery subsidy agreement? The whole agreement will collapse. Is everybody able to understand? What are the two parts to the agreement? One, the subsidies that are provided by the member countries for fishing activity. Right? That is essentially a lot of these particular fishing communities, or let's say the fishing companies, receive subsidy from the government. They go into deep seas. They go into uncharted territories, etc. and keep on conducting the fishing activity, commercial fishing activity. The technical term used to raise the concern is IUU, illegal, unregulated, unreported fishing. Is it okay? Illegal, unregulated or unreported and unregulated fishing. And when these particular companies, or let's say fishing, the involved in the fishing will receive the subsidy from the government, they will keep on conducting large amounts of fishing. This will reduce the number of fishes in the sea, and this will hurt the overall ecosystem. So we want the countries to reduce these kind of subsidies. This has been accepted. Has India accepted this? No, it opposed it. Because the argument of India is, in case of India, a lot of these particular farmers are artisanal farmers. A lot of individual farmers are artisanal farmers. Right? These are not the commercial, fishers, not farmers, artisanal fishers. In case of China, in case of European countries, you have companies, commercial fishing companies. They get subsidies. They are involved in IUU. But in case of India, most of the fishers are artisanal fishers. So they can't sustain the fishing activity and they're not involved in the IUU. So Government of India opposed it. But again, I'm saying WTO 2/3 threshold we have met. Done. What is the second aspect of the agreement? Second aspect of the agreement is the government's giving subsidies which will add to the capacity which will contribute to IUU. What do you mean by capacity? Let's say certain governments will give subsidies for shipbuilding companies. Now, these particular shipbuilding companies will invest money, they will build better ships, and the supply of these kind of ships or the vessels which can be used for fishing activity, supply increases. With higher supply, these will become comparatively cheaper in the market. This will contribute to higher fishing activity. So, subsidy is contributing to the IUU. So, that is the second aspect of the agreement. We are yet to come to agreement over the second aspect. First aspect, agreed. It has come into force. We have to come to an agreement on the second aspect of the agreement in the next 4 years. Otherwise, the whole agreement will collapse. In addition to this, there is also a fund which has been proposed. A fish fund would be created which will collect the money from the developed countries or the fishing countries, and this fund will be used to provide assistance for, right, let's say the least developed countries as well as the developing countries, so that they will be able to move away and meet the conditions under the agreement. So these are certain important points associated with WTO's agreement on fishing. Is everybody okay? Can I move on to the next article now? Please do let me know in the chat section. Those who are having dinner, you also please do let me know. Unlike yesterday, somebody typed A instead of yes. Don't type A, type yes, alphabet yes. Right, can we move on to the next article? Okay, let's go forward. Centralized and decentralized procurement. Centralized and decentralized procurement. Why was it there in the newspaper? One of the state, Madhya Pradesh has asked Government of India or stated that they want to move away from the decentralized procurement to centralized procurement. They don't want to be part of decentralized, they want to be part of centralized procurement system. What is the meaning of it? Simple. We have National Food Security Act, NFSA. Under NFSA, the procurement has to happen. Why? The food grains have to be distributed under the public distribution system, PDS, public distribution system. National Food Security Act 2013, and the food grains will be procured in order to distribute under the public distribution system. Now, when the procurement happens, there are two methods. One is called as a centralized procurement, and the other one is decentralized procurement. Centralized and decentralized. What is the meaning of the term centralized and decentralized? In centralized, the Food Corporation of India will procure the food grains. All the food grains will be transferred to the central pool, and from the central pool, now the food grains will be issued in the same state or in a different state. In addition to this, there is also a procurement which is done by the state government agencies. The state government agencies, they will transfer the food grains into the central pool, and from there the food grains would be allocated to the same state or transferred to another state. This is essentially centralized procurement. And for the state government which has involved itself in the procurement activity here, the central government will provide funding. Central government will pay commission. Right? There is a formula for it, they will pay commission. This is centralized. What about decentralized? In decentralized, the state government will procure food grains, will store food grains, and will distribute the food grains. Is my point clear to all of you? In decentralized, the state government agency will procure, store, and distribute the food grains. But what if they procure more than what is required for distribution in the same state? If they procure more than what is required, then they will give it to the center. Then in that case, they will transfer it to the center. Now for conducting all these activities, for procuring, distributing, storing, etc., the central government will use a particular formula and pay money to the state government. Is the point clear? We'll pay money to the state government. This is essentially the difference between centralized and decentralized. But why is Madhya Pradesh saying that they want to opt out of decentralized? Their argument is simple. The actual expenditure incurred by the state government is higher compared to the calculation that is done by the central government. Point number one. Everybody is able to understand? Center uses a formula to calculate money and pay money to the state. The state government simply says, I am incurring more than this. So this is not working for me. First one. Second one, let's say the state government will incur expenditure today. Center will give money after 1 month, which means money has to be spent today. They will receive money after 1 month. So for the next 1 month, can I simply say there is some amount of shortage of money for the state? So now what the state will do? It will go to the market, borrow. And when they borrow, they will have to pay rate of interest on that. Will the center compensate? The state is saying no. Center is not considering this kind of an interest expenditure incurred by us. So these are the reasons which have been cited by the Madhya Pradesh government, essentially asking it to be removed from decentralized procurement and simply shift to centralized procurement. Is everybody okay with the discussion? Can I move on to the next one? Do let me know. Is everybody okay with the discussion? Okay. Next concept. IMO, International Maritime Organization. Okay, IMO stands for International Maritime Organization. IMO Net Zero Framework. The International Maritime Organization is essentially a body under United Nations. It's a body under United Nations. Now, this particular body last year met and was supposed to vote and approve a framework. Simple. They met, they were supposed to vote on this and approve a framework. What is the framework? Net Zero Framework. This particular framework earlier was essentially approved in April 2025. And basically it will include a new chapter, that is chapter 5 under International Convention for Prevention of Pollution from Ships, MARPOL. The short form of this is MARPOL. What is the framework here? The framework essentially will ensure certain practices to be adopted by the companies involved in the maritime transportation, which will help in reduction of emissions. Simple. Practices which will help in reduction of emissions. So that is essentially the idea of the IMO Net Zero Framework. Now, why was it there in the newspaper? As such, because they want to reduce the emission, important, please remember. But in addition to this, it became important, it became relevant because of the current US administration. It became important because of current US administration. What is the meaning of this? The USA did not participate in the meeting, but they threatened that. The companies which will participate and will approve the implementation of this particular framework, those countries would be targeted by USA. Simple. All of you able to understand? This particular framework will help in reducing the emissions which are caused in the seas, that is by shipping vessels, etc., etc. It will help us in reducing the emissions. But the USA administration threatened that the member countries which will vote in favor of the implementation of this, they would be targeted by USA. USA would target them and start taking certain action against them. Maybe the USA will announce higher tariff. Maybe USA will sanction the companies, shipping companies which are present in these countries. Maybe they will sanction the ships or the vessels which will operate using the flagging or the registration from these particular companies. So USA simply said, we don't approve this. We don't want this to be implemented. And the person who is asking, curious learner, why? My dear, you tell me. Is the current USA administration in favor of any policy which is going to help in protection of environment? Think of it. You tell me any kind of a policy that you can think, you can associate with this particular administration in USA, which you can say, yes, this policy is towards protecting the environment. That their argument is climate change is a hoax. Right? I hope you know this. Their argument is simple. Climate change is a hoax. Right? So no point in protecting environment like this. It is part and parcel. Earth is cooling, etc., etc. So you don't worry about all of it. Argument is simple. USA said we will target the countries which will approve it. That's a reason. Right? Many countries, including India. India was also party to this. Including India, many particular countries voted basically to postpone the meeting. Is it okay? They decided to vote in favor of postponing the meeting altogether. They said, let's meet next year and take a call whether to implement this particular framework or not. But essentially, you remember the important points associated with this. Next one, municipal bonds now eligible for repo and reverse repo deals. Municipal bonds now eligible for repo and reverse repo deals. The government of India, that is the Minister of Finance, has announced that the Muni bonds, municipal bonds are also referred to as Muni bonds. Muni bonds now will become eligible for repo and reverse repo transaction. What is the meaning of it? Right now, what kind of instruments are eligible for repo and reverse repo? You have treasury bills. You have dated securities. You have the standing development loans, STLs. These kind of instruments are eligible under repo and reverse repo transaction. Right? I hope all of you know what is repo and reverse repo. If you say, sir, what is repo and reverse repo? Then my dear, your basics of banking are not clear. Very simple. Basics of banking are not clear. That's a very clear indication. So, right, repo and reverse repo transaction, right now, these are the instruments which are generally used. But in addition to this, there are also municipal bonds. Municipal bonds. These are issued by the municipalities. The name itself is an giveaway. Okay. These are issued by municipalities. For what purpose? For example, take the example of smart city schemes. Smart city scheme, right, or smart city mission. Under this, 100 cities were identified. These particular cities were supposed to invest a lot of money, right, repair certain infrastructure, develop certain infrastructure. So, lot of these particular municipality bonds have been issued by the municipalities which want to invest them for specific purposes. And this is required for a simple reason. The third tier government, that is the municipalities, have lot of work to undertake, have lot of services to provide. And the population in the cities is actually ballooning, and it will balloon over a period of time. So they need to develop infrastructure, repair infrastructure, maintain infrastructure, for which they require a lot of money. And the way they are able to spend depends on how much revenue they earn, how much income they earn. And that is where the criticism or the concern is always there. They do not have sufficient revenue generating capacity. They do not have sufficient revenue generating capacity. A lot of the expenditure they incur is essentially by taking the money from the center as well as the state government. So that is where the muni bonds or the municipal bonds become so relevant. And many of the cities have also issued municipal green bonds as well. So important things, please remember this. Now what has the government of India done here? It says these muni bonds will add to this particular list. They'll become part of this list. And what is the benefit of that? If muni bonds are also eligible for repo and reverse repo transactions, don't you think lot of the institutions now will be interested? Lot of institutions now will be interested in buying the muni bonds. All of you able to understand? right? Lot of the institutional investors, for example, banks, insurance companies, right? Lot of these investors now will be interested in purchasing money bonds because they can use it under repo and a reverse repo transaction. With this, we are expecting the demand for the money bonds to be promoted. And it will help a lot of the municipalities in India to basically come forward and start issuing these money bonds, raise funds, use it for investment purposes. Done? Everybody is okay? Right? These are important points. Please remember regarding municipal bonds. Next one. RBI speeding up, bringing back gold. RBI essentially maintains Forex reserves. RBI is the custodian of Forex reserves. Point number one. In the Forex reserves, there are four components. We have gold, we have foreign currency assets, we have right SDR special drawing, right, the facility, special drawing facility, and we also have gold tranche. We also have gold tranche. Okay, right? These are the four components. These are the four components under the Forex reserves. Now listen to me carefully. The most important component, majority of the Forex reserve will be foreign currency assets. Majority of it will be foreign currency asset. But in addition to this, RBI is also holding lot of gold. Lot of gold. But this particular gold, which is held by RBI, some of it is stored outside India and some of it is stored in India. Simple. Okay. Some of it is stored outside India and some of it is stored in India. According to the latest data, please have a look at this. 512 tons of this particular gold was stored in the domestic market and 348 tons of this gold was stored outside India with Bank of England and Bank of International Settlement, BIS. Right? So this is basically the number. Done? Let's go forward now. Let's go forward. Out of this, in recent times, a lot of the gold which was stored outside India has been brought back into India. Right? Out of this, a lot of which was stored outside India has been brought back to India. Please have a look at the data. You will understand. Please have a look at the data. Please don't do a PhD here. Don't do a PhD. What is the logic? Understand. Not a PhD here. Okay, please have a look at the data. September 2025, March 2023. In March 2023, gold with Bank of England and Bank of International Settlement was more than 473 tons. In the domestic market, it was 300 tons. But now, this number has reduced and this number has increased. And before you simply say, but sir, here the number is different. Above number is different, below number is different. My dear, look at the dates also. Please look at the dates also. Simply don't look at only the number and start typing. Look at the dates. This is as of March 31st and this is as of September 2025. Right? Which essentially means you will see the amount of gold held by RBI outside India, it has reduced. Now two questions. One, why is RBI holding gold outside India? And point number two, why is RBI bringing the gold back to India? Let me start with the point number one. RBI purchases a lot of gold outside India. Right? For example, London market has the standard of gold. Right? It purchases a lot of the gold outside India. And when they purchase the gold, rather than bringing the gold back to India, which will require transportation cost, and in India also, you should have sufficient storage capacity. You don't have all of it. So rather than simply incurring all of these particular problems, you will store outside India. This is the reason. Point number two, why are they bringing the gold back to India then? They are bringing the gold back to India because they are worried that some of the countries might impose sanctions on India because we are conducting trade with Russia. What if the push comes to shove? What if other methods don't work out and the USA will impose the sanctions on India as well? because they want to completely cut off Russia. That might happen. And because these kind of assets which are held outside India might be targeted, Reserve Bank of India is bringing the gold back to India. This is one reason. Second reason is simple. They have invested a lot of money in India. They have developed a lot of storage facility in India. That's a reason they are bringing the gold back to India. These are the reasons, right, basically for storing gold outside and bringing the gold back to India. Right? So these are the important points. Please focus on these points. Okay. Next one. Right, Nitin Lodi is asking, by the way, भाई यूपीएससी की prep कर रहे हैं या economist बनना है? Right, I don't know whether the question is for you people or me. Nitin, please clarify. Let's go forward. Digital gold. SEBI is warning, right, with investments in digital gold. Right, SEBI is warning regarding the investments, right, of investors in the digital gold. What is this idea for digital gold? There are a lot of these institutions which are offering a product called as digital gold to the investors. Digital gold. What do you mean by digital gold? There are many other investment types associated with the gold. You can go to the market, purchase physical gold. You can invest in gold ETF. You can invest in gold bond. But there is one type of instrument which was introduced back in 2012 and 2013. This is called as digital gold. What is the idea for digital gold? Let's say I'm an importer of a gold. Rather than you purchasing gold from me, you will simply pay me the market price of the gold. All of you able to understand? You will simply pay me the market price of the gold. And when you pay the market price, along with, right, the maintenance charges, the storage charges, and there's a GST also, 3% GST applicable on this. When you pay me the price, let's say of 1 gram, I will not give you 1 gram, rather I will store this 1 gram, right, in a safe custody. Is it okay? Right, I'll simply store this particular 1 gram, right, there's a custodian, there is a third party here, I'll simply store this gold. If you want, you can sell this instrument to somebody. This is called as digital gold, by the way. If you want, you can trade it with someone. Or if you want, you can come to me on fine day, simply submit the instrument and I will give you 1 gram of gold. This is essentially the concept of digital gold. Is everybody okay with this? This is essentially the concept of digital gold. Now, why is SEBI warning against digital gold? Why is SEBI warning? SEBI simply says there is no regulator for this. SEBI is saying that there is no regulator for this. Why? Digital gold is neither a security. It is not a security according to the act of the government. There is a Securities Contracts Regulation Act. It is not classified under that. Because it is not classified under that, who will regulate it? Who will regulate it? There is no regulator. RBI is also not regulating. SEBI is also not regulating. Done? All of you able to understand? So because there is no regulator, there is no guarantee whether the company or the institution to whom you have given the money, whether will they return the gold to you. Are they storing gold when you're paying for 1 gram of the gold? Right? Etc. etc. Right? So the concern is you're facing a lot of risk. You're facing counterparty risk. You're facing operational risk. So SEBI simply says, right, it is warning the investors, this is very dangerous. Don't invest here. Don't invest here. There is no regulator for this particular investment. Done? Right? So this is essentially one more concept. It is similar to gold bond scheme. My dear, in case of gold bond, the gold bonds, I believe you're talking about sovereign gold bond. Sovereign gold bonds are guaranteed by the government. These are guaranteed by the government. Sovereign gold bonds are government bonds. Government doesn't default on the bonds. Government will guarantee the payment. But here, nobody is guaranteeing. No, right, government guarantees. No government recognition. No regulator. In that case, right, what is a guarantee that Once you, right, basically submit the digital gold instrument, they will give your gold back. What is a guarantee? They are storing gold in the first place. What is a guarantee? They are following the guidelines correctly. What if they invest in a wrong, right, let's say, instrument in the market, incur losses, they will use your gold. I hope you understand. There are a lot of risks. There are a lot of issues associated with that. Next one, Rajiv Gauba panel. QCO, Rajiv Gauba panel recommendation. What is QCO? Quality Control Order. QCO simply stands for Quality Control Order. And what is the recommendation of this particular committee here? It's a high level committee which has been set up by the government of India. The Rajiv Gauba panel has recommended that there are a lot of quality control orders which have been implemented by the government authorities or government ministries which are actually hurting industries. The quality control order is a type of a non-tariff barrier. NTB stands for non-tariff barrier. That is a restriction which is not a tax. Non-tax restriction. It's a non-tariff barrier. Generally, the NTBs, generally the quality control orders are implemented in order to protect the health of the consumers. Essentially, these are done in order to ensure the imports which are brought into India, they will meet certain specifications. They will meet certain standards. And the consumption of this will not hurt the consumers. So the argument is these are generally used to target a finished good. But this committee simply says the government authorities or the ministries have announced multiple quality control orders. According to an estimate, in 1 decade, the quality control orders which were around 70 have almost become 790 in a span of 1 decade. And most of these particular quality control orders have been imposed on, right, let's say raw materials. They have been imposed on inputs. So what was the original objective? Original objective was to impose on final good. Now you have started imposing on inputs, raw materials, etc. So this is hurting the importers. This is hurting manufacturing activity. This is hurting exports from India. So that's a reason this committee has recommended that the practice of the ministries to simply keep on announcing this under the BIS Act of 2016. Remember, the QCOs are announced under the provisions of BIS Act, Bureau of Indian Standards Act of 2016. So this particular practice should be reduced. If you want to impose QCO, target final goods, and lot of these particular QCOs either should be removed by the government or paused by the government. Done? Saloni Gupta, my dear, lot of your basics are weak. Again, don't take it as a criticism. I'm worried about you. I'm concerned about you. Because if you have done economics, if your basics are strong, you should be careful. QCO stands for Quality Control Order. That is, it is a requirement. For example, if I want to import something, I will have to go to the BIS, Bureau of Indian Standards, submit documentation, get a clearance certificate. Get a certificate. This is called as Quality Control Order. Done? Okay, let's go forward. Revati, my dear, 9 o'clock. By 9:10, we'll be done with the class. Don't worry. Floating rate bonds. Floating rate bonds. Now, these are the bonds which are issued by Reserve Bank of India. Remember, floating rate bonds. These are the bonds issued by Reserve Bank of India. And these are backed, guaranteed by Government of India. What is the importance of the floating rate bonds? Traditionally, there is a lot of demand in the market for the bonds issued by the government directly. The government bonds. But in recent times, there is a rising demand for the RBI issued floating rate bonds. But why is it called as a floating rate bond? The rate of interest on these particular bonds will keep on fluctuating, will keep on getting changed. Sir, why it will change? The rate of interest on the floating rate bonds is connected to National Savings Certificate, NSC. There is a type of small savings schemes, right? I'm pretty sure all of you heard of small savings schemes, Kisan Vikas Patra, etc. Right? There is a type of a small savings scheme, National Savings Certificate. So whatever is the rate of interest on the National Savings Certificate, according to the change in this particular rate, the floating rate bonds or rate of interest will also keep on changing. Right? So in recent times, there is a higher demand for these kind of bonds in the market. Reason is the rate of interest on the floating rate bonds has gone above the rate of interest or the yield rate on the Government of India bond. And because the Government of India bonds guaranteed by the government, the RBI's, right, the floating rate bonds are guaranteed by the government. Both the sides the government guarantees. Why not prefer the one where rate of interest is higher compared to the other? That's the reason these kind of bonds preference in the Indian market has actually increased now. Right? And the lock-in period, in case of these, there's a lock-in period of 7 years. Interest is paid semi-annually. That is basically twice in a year the interest is paid, and it is the same in case of Government of India's bonds as well. Interest in this is taxable at slab rates. That is, whatever interest you earn, it will be counted as a part of your total income, and whatever is the income tax applicable on total your total income, same right, let's say income tax is applicable on this as well. Minimum investment is 1,000 rupees, and where can you purchase this? You can purchase this directly from RBI's Retail Direct Gilt Scheme. So please be very careful. This is a very niche type of a bond. Niche in the sense you will not get the information associated with this generally in the books. But suddenly it was there in the current affairs. UPSC can pick up this particular question. Okay, can I move forward now? Deposit insurance, risk-based insurance. Yesterday also we had discussion associated with deposit insurance. The deposit insurance is provided by a subsidiary under the ownership of Reserve Bank of India, 100% owned subsidiary, that is a DICGC. RBI owns this. The DICGC provides a deposit insurance of up to 5 lakh rupees per depositor. This is what I've covered yesterday. What is the update? The Central Board of Directors of Reserve Bank of India now has approved risk-based insurance. What do you mean by risk-based insurance? Right now, the banks, whenever they collect 100 rupees deposit from a customer, for every 100 rupees, the banks are supposed to pay 12 paise premium. Is the point clear to all of you? For every 100 rupees, the banks will pay 12 paise premium, insurance premium to DICGC for providing insurance coverage. Now the DICGC has been authorized by Reserve Bank of India, right, basically to introduce risk-based insurance. Meaning what? If one bank is more healthy, if this particular bank has more security compared to another bank which is very risky, in the sense the loans are very high NPS, the bank is incurring lot of losses, etc. So risky bank. So now the insurance premium can be changed from one bank to another bank. If the bank is more risky, higher insurance. If the other bank is very safe, lesser insurance. This is essentially the concept of risk-based insurance. And there have been multiple committees which have recommended this already. For example, there is a Kapoor committee, COPOOR, Kapoor committee. There is a Jaswant Singh committee. There was one more committee back in the 2016 which was set up by DICGC itself. So multiple committees in the past have recommended a risk-based insurance. And now this has been implemented by, this has been approved by the Central Board of Directors, and this will be implemented by, right, DICGC going forward. But please remember, can the DICGC increase the insurance premium to, let's say, 20 paise for 100 rupees deposits? Can it increase it to 1 rupee per 100 rupee deposit? Not allowed. Please remember, not allowed. Why? The Government of India very recently amended the DICGC Act. Right? They've amended the DICGC Act. And this particular amendment that was done back in the 2021 amended section 15(1) of DICGC Act. According to this amendment, DICGC is allowed to collect a maximum insurance premium of 15 paise. Is it clear? Maximum insurance premium they are allowed to collect is 15 paise. And that too, if they want to increase it from 12 paise to 13, 14 or 15 paise, first they will have to get the approval from the Reserve Bank of India. Done? Can we move on to the next concept now? Do let me know. Can we move on to the next concept? 81 bonds. In Supreme Court of India, there is a hearing happening. In the Supreme Court of India, there is hearing happening that is associated with the 81 bonds. What is an 81 bond? 81 bonds are additional tier 1 bonds. Additional tier 1 bonds. These kind of bonds are issued by the banks. These are issued by the banks. And the money that is collected by issuing these kind of bonds are essentially counted as a part of the tier 1 capital under Basel guidelines. That is Basel 3 guidelines. Done? Now what are the features of additional tier 1 bonds? The additional tier 1 bonds do not have any maturity period. Remember this. There is no maturity period for additional tier 1 bond. Meaning what? The bank which has issued the bond will decide when they want to repurchase it. Simple. The bank has issued it. The bank will decide when they want to repurchase it. You cannot sell it to the bank again. Right? The bank will decide when they want to repurchase it. Right? No maturity period. And these are very risky bonds. These are very risky bonds. What do you mean by risky bonds here? You have given money to the bank and purchased the bond. What if the bank is incurring a loss? What if the bank is essentially about to shut down? In such cases, the bank will not return your money. Simple. All of you able to understand? Right? The bank will not return your investment. You might have paid 1,000 rupees to purchase the bond. The bank will not return your 1,000 rupees. They'll simply say, risky, I will cancel the value of your bond. I will write off the value of your bond. So very risky bonds. So these kind of bonds earlier were issued by Yes Bank. Yes Bank incurred certain financial issue. An administrator was appointed by Reserve Bank of India. This administrator cancelled or wrote off the additional tier 1 bonds which were issued by the Yes Bank. Against this particular decision, the bank has been dragged to Supreme Court of India. Right? The bank has been dragged to Supreme Court of India. So the hearing is happening associated with the announcement of write-off of additional tier 1 bonds issued by Yes Bank. Done? Okay. Next, SWIFT, Society for Worldwide Interbank Financial Telecommunications. Right? Listen to me carefully. SWIFT, Society for Worldwide Interbank Financial Telecommunications. The banks in India have implemented the new set of guidelines of SWIFT ISO 20,022 framework. Right? Listen to me carefully. There is a new standard which has been introduced by SWIFT. The banks around the world were supposed to implement this particular standard by November 2025. RBI and Government of India have asked all the banks to implement it, and the standard has been implemented. Now those who are wondering, sir, what is the standard, what is SWIFT, etc. SWIFT essentially is a platform. Again, I'm simplifying it. It's essentially a platform which will help the banks to communicate with each other. Whenever the funds have to be transferred in the international market, that is across the border, the banks need to communicate with each other. and that communication is established using the SWIFT. Right? This is basically a platform which will help banks to communicate with each other. Again, the funds are not transferred. The banks will communicate with each other. They will send messages, receive messages. They will ask the details of the customer. Details of the customers are sent. Account numbers are exchanged, etc. So it's a messaging platform. It's not a platform to transfer funds. It is a messaging platform. Done? Everybody is able to understand? Right? So SWIFT, a new set of standards were announced, and in India we have implemented these particular standards. Right? The name of the standard is ISO 20022, messaging standard. With this, more granular data, more detailed messaging can be done by the banks across the border. This is essentially the importance of SWIFT standard. Now, the last part of the discussion, important points. Just points. What is the importance? Let's understand. Like yesterday, I've also given the tidbits. I've given the points here, but after the session is over, download the notes. In the notes, I've given one paragraph of information on all of these particular points. Let's start. Gati Shakti platform. Gati Shakti platform, it's a platform which has been implemented by Government of India, essentially developed and maintained by Bisan ji. There is an authority called as, Bisaj N, not Bisan ji, Bisaj N, Bhaskaracharya, Institute. So this particular entity has developed Gati Shakti, where basically multiple departments, ministries, etc. have been brought onto the platform. So far, this particular platform was available only for the government authorities. It was available only for the government authorities. Last year, the Government of India has made this particular platform available even to the private sector. What is the reason? It will help private sector to plan properly. And why was the access not allowed? The government was worried that very sensitive information which is available in the platform might become available for the private sector companies. So multiple layers of information are hidden which are sensitive, and whatever is the normal information, it is made available to the private sector company. Done? So Gati Shakti. Second one, small finance bank PSL has been reduced to 60%. For the small finance banks, the PSL, priority sector lending, which was 75%, has been reduced to 60%. So RRBs it is 60%, SFBs it is 60%. For the other scheduled commercial banks, it is 40%. Remember, the numbers can be questioned in the prelims. USA government or USA Congress has introduced an act called as HIRE Act. HIRE. Just remember the expansion. HIRE stands for Halting International Relocation of Employment Act. Again, this is a bill which has been introduced in the US Congress, not yet implemented. And what is the importance of this? Under this particular bill, they have proposed to impose taxes on companies which will outsource the work to other countries. All of you able to understand? It will impose the taxes or the tariffs on certain companies which are outsourcing the work to other countries. And by imposing a tax or a tariff on the, let's say these particular companies, the US Congress through the bill is saying generate more jobs in America, not outsourced to other countries. If it is passed and implemented, one country which would be affected greatly by this would be India, because a lot of the services from USA are outsourced to India. Okay. India and Israel have signed bilateral investment treaty. Remember this bilateral investment treaty. We have a BIT framework which has come into force post 2015 and 2016 in India. What is a bilateral investment treaty? It is essentially an agreement between two countries to protect the investments which are coming from each other's country. For example, let's say an Israeli company wants to operate in India. Will it be treated differently? Will it be penalized by the government of India? Will any policy be made by India targeting these Israeli company? All of these kind of protections are provided under the agreement which is called as bilateral investment treaty. Right? So India and Israel have signed BIT. Clearing Corporation of India has completed 25 years. What is the importance of this? In the financial market, you will come across a term called as market infrastructure institutions. Market infrastructure institutions. What is the importance of market infrastructure institutions? These kind of institutions will ensure all the processes in the financial market will happen smoothly. These are essentially the backbone of the financial market. For example, all of you heard of clearing corporations? You have heard of stock markets, right, etc. So there are different types of the market infrastructure institutions. Essentially, these are systemically important institutions. These will ensure the transactions in the market, that is transfer of securities, settlement of the transaction, right, basically buying and selling of the securities, all these essentially will happen and the settlement or the whole process will take place smoothly. These are called as market infrastructure institutions. So one of them, the Clearing Corporation of India Limited, has completed 25 years. Can be questioned in the prelims. ECB, external commercial borrowings. There is a method called as external commercial borrowings. Under the external commercial borrowings, basically you can borrow from the external market. That is the commercial entities, the companies in India which are allowed to attract FDI, which are allowed to get FDI, they can go to the foreign market, issue instruments, right, such as bonds, convertible bonds, or borrow from a bank, etc. What is the limit? Limit is up to $750 million. Now, right, basically there is a proposal, RBI, because RBI is involved in this. RBI has given a proposal wherein they want to increase this particular limit from 750 million. Somebody is saying there is no voice. Madhav is saying there is no voice. Is it the same for all? Do let me know. Is it the same for all? Because as far as I am concerned, there is absolutely no issue with the sound. Others, it's clear? Thanks a lot. Madhav, my dear, please check from your side. So the Reserve Bank of India has proposed a higher limit from 750 million, right? They have a proposal to increase it to, right, let's say $1 trillion. 1 trillion, and many other proposals are there. The integrated portal 2.0 has been conceptualized by, right, IEPFA under the Corporate Affairs Ministry. What is the importance of this? There is a lot of discussion happening associated with the money that has been invested and forgotten. Right? Money that has been, Prithvi is asking trillion. My dear, not trillion, my mistake. 750 million to 1 billion. My mistake. Did I say trillion? My mistake, right? So it should be clear now. $1 billion, 750 to $1 billion. If I've said trillion, my mistake, correct it. Okay, come back to this. There is a lot of discussion associated with money which has been invested and, right, there is no claim on it. Right? There is no claim. Either the person has forgotten it or the person has passed away. Right? So a lot of money which is unclaimed is lying with multiple financial institutions in India. Right? In fact, the government of India has launched an initiative, right? Aapka paisa, aapka hak. Right? I hope all of you heard of this. Aapka paisa, aapka hak. Essentially, it is saying that your money is lying with multiple institutions. Here are the methods to reclaim it. So what if you have invested money? That money is lying unclaimed. Sir, how can it remain unclaimed? For example, dividends. Correct? For example, dividends, right? Or let's say the bonds which have matured, etc. So in such cases, if you have not claimed this for 7 years, then essentially it will be transferred. Now this particular portal has been set up, integrated portal 1, initially the first iteration, now the second iteration. So you can use this particular portal to claim this unclaimed money. Again, what kind of unclaimed money I'm talking about here? Dividends, right? Dividends I'm talking about, right? Let's say bonds maturing, etc. These particular funds will be transferred. You can use the portal to claim your money. Okay. RBI has clarified that 2000 rupee even today is a legal tender. Just a factual information. 2000 rupee right now is a legal tender. Meaning what? Right? RBI simply clarified stating that if you have 2000 rupee, don't worry. People will not accept in the market. You can deposit this with RBI and get the change back. Right? I think around 19. Yeah, number is 19. 19 offices of RBI have been identified. You can go to any of these particular RBI offices, deposit this old 2000 rupee currency note and get the money back. That is, get the equal value in other denomination back. What if you are not able to travel? Right? Because let's say one of the office you have identified, it is nearby your place, but let's say 200 kilometers, 300 kilometers, or even 100 kilometers. RBI simply says, don't worry, send it through registered post. Send it to the post, but please provide your account details. Right? Once we receive this particular old 2000 rupee note, you have given your details to me, I will transfer equivalent amount of value into your bank account. Right? So this clarification has been given by Reserve Bank of India. Please make a note of this. Next, government will be beginning a national migration survey. A year-long national migration survey has been launched by the government. What is the use of this? Government wants to measure the migration patterns in India. That's important, by the way. They want to measure the migration patterns in India. The recent data is not available. Dedicated migration survey in the recent has not been conducted by the government. In the past, they have conducted that. So they want to conduct this particular national migration survey. They want to find out how the migration patterns are changing, and according to that, make certain changes to policy as well. For example, migration plays a very important role in terms of announcement of labor policy, in terms of, right, let's say announcement or let's say allocation of food grains to different states, etc. So for policy making, you require data associated with migration. So national level migration survey has been launched. DSIBs, the Reserve Bank of India, every year identifies a certain banks as domestic systemically important banks. So for this year, the same three banks, SBI, HDFC and ICICI Bank, have been essentially identified. The same three banks have been identified as a systemically important banks. Right? So understand the logic here. What is the importance? RBI simply says these banks are important. We will have to regulate them in a much stronger way. We will impose higher regulations, stricter regulations on them in order to ensure the banks do not fail. Right? That is the importance of DSIB. And who will identify the DSIBs? Reserve Bank of India. China's trade surplus has crossed $1 trillion. According to the latest data, it has now become $1.2 trillion for last year, that is 2025. What is the importance of this? This is the first country in the world to achieve a trade surplus of $1 trillion. Am I clear? First country in the world. So automatically it becomes important. Bank has become the first payment bank to get a license to convert as small finance bank. Bank has become the first payment bank to be given license by RBI to convert as a small finance bank. Because please understand, a payment bank has more restriction. Payment bank cannot collect deposits more than 2 lakh rupees. The payment banks cannot give loans. Payment banks will have to invest 75% of the money that they have collected in bonds. Remaining 25% they will have to keep it another bank. Whereas the same conditions are not applicable to small finance bank. So argument is, Bank has been given a license by RBI to convert as a small finance bank. This is the first payment bank to be given such a license. Next, first indigenous water soluble fertilizer plant has been inaugurated in Nagpur. Remember this. Indigenous water soluble fertilizer plant. You must have heard of lot of these particular fertilizers which are available in liquid form. Specialty fertilizers. There is a term called as specialty fertilizer. India imports majority of the requirement of a specialty fertilizer from China. And very recently, a lot of restrictions were imposed by China regarding exports of it. Now, rather than being import dependent, these now will be produced. Not all of them. It is the first plant. Right? So the focus is promoting the production of that in the domestic market itself. Okay. This becomes important because this is the first indigenous plant to produce a specialty fertilizer. SEBI has launched a new portal called as Past Risk and Return Verification Agency, PARVA. Remember the name of the portal, PARVA, Past Risk and Return Verification Agency. And what is the importance of this particular, right, PARVA portal? You as an investor, you do not know what is the actual returns provided by certain intermediary in the market. There is no clarity. Right? Somebody will basically say, I've given 15% guarantee or 15% return. Some other, right, let's say the market intermediary will simply say they have given the investors 12% returns. There is no clarity whether they are telling you the correct data or not. But now, using this particular portal, you can actually find out which entity is offering how much returns to their investor. It is it is an authentic data which is collected and published by SEBI now. Right? This will essentially empower the investors in taking decisions regarding investments of their money. Done? Right? So these are certain things I wanted to discuss with you people, covering the important concepts, current affairs articles from the month of July to December 2025. If you have liked the discussion, do not forget to hit the like button. If you are yet to join our YouTube channel, kindly do it right now. Right? What are your thoughts regarding the topics that I've covered? Right? What is your doubt, etc.? If you have any kind of issues, drop in the comments part of the video. Now, if you have any kind of doubts, do let me know right now. Let me address. Sir, in NH poll news, if roads are built under BOT model, then also the price determined by the same method, these are applicable to the government maintained roads. Okay. What is STR? Saloni Gupta. STR stands for Special Drawing Rights. Special drawing rights are the notional assets which are issued by the IMF to its member countries. You can basically sell them, convert them into, right, let's say the internationally convertible currencies. That's the reason these are counted as a part of, right, the foreign reserves, foreign exchange reserves. Please change the background to white. My dear, listen to me carefully. I'm giving you notes. Don't take a printout of this particular PPT's PDF. Use it as PDF. Please download the notes. Notes are much more exhaustive. PPT is just points. So whether this is white background, dark background, it should not make any difference to you. Okay? Next. Sir, if I holistically follow these particular current affairs, will there be any necessity for me to go ahead any other current affairs? My dear, this is my question to you. I've covered, I think yesterday and today I've covered around 60 to 70 or 80 topics. And again, when I cover the current affairs for the January to April, I'll cover many more topics. How much more you want to cover for current affairs? There is no end. I hope you understand. There is absolutely no end to coverage. Focus on the important things. Done. How wise to conduct national census in April? My dear, this is economic class. Don't worry about the population census. Even if a question is asked on population census, it will be asked in mains. Why are you worried for prelims? Okay. Anything else? So the test will be on 19th or 20th. Okay, listen to me very carefully now. Right? I have basically scheduled two special classes. Yesterday I've covered January to June. Of the handouts that I've given, I want you people to go through the handouts. I've scheduled a session on 19th. That is basically going to cover January to June. Right? I'll give you questions, solve it, doubt, let's resolve it, 30-45 minutes, let's wrap it up. So 19th, right? Basically 19th January, 11 a.m. Whatever I've covered today, the handouts will be made available to you. Just check out my Telegram channel. It will be uploaded in some time. Download, use the PPT, revise, come prepared on 20th January, 11 a.m. I'll give you questions, solve it, you're done. That will basically reinforce your preparation, will give you confidence that you're ready for the, let's say, the current affairs part of Indian economy. Okay, so that's it from my side in today's session. As usual, if you have liked the session, do not forget to hit the like button. If you're yet to join our YouTube channel, kindly do it now. Do not miss out the other current affairs sessions under the Conquer Prelims that will happen in the subsequent days. Right? Thank you. Have a great day.